My name is Johnny Finity. I'm the content manager at Levelset. Levelset essentially helps contractors and suppliers get paid faster. So we have our flagship program is lien rights management. So we help contractors and suppliers automate and track their notices on multiple projects across the country and protect their lien rights, which is a contractor's most powerful tool to get paid faster. But we also have a lot of other things, tools to help contractors assess the risk of their customers before they sign a contract, as well as material financing to get them 120-day terms on materials that we pay for up front. But one of the things that we talk a lot about, in terms of mechanics liens is bonds, which are typically, we talk about it from a payment point of view. So we talk about the payment bond, either on a public project or a private project. But there are a lot of different types of bonds out there. When a contractor is working on a public project, there's typically going to be a payment bond. So if you're not paid, rather than filing a mechanics lien, you can file a bond claim with the surety. But that's just one type of bond. There's lots of different types of bonds. So today, Matt Bocklage, the senior account executive with SuretyBonds.com, is here to break it down for us. Bonds and sureties are kind of this complicated, nebulous thing that a lot of people have questions about. So Matt's here to answer all your questions today and talk through some of the different types of bonds and what the process actually looks like to getting bonded. So Matt, take it away.
Thank you, Johnny. Hello, everyone, and welcome to All About Bonds. Today, we're going to touch on some bond basics to help give you a better idea of what bonds are and how to secure the correct bond so that you can get paid faster. My name is Matt Bocklage. I'm a senior account executive with SuretyBonds.com. I originally secured my insurance licensing back in 2010, and I've been here at SuretyBonds.com for the last 10 years now. In that time, I've personally issued thousands of construction bonds and have helped countless contractors who initially were very confused about what they were needing. Today, I'm going to explain what a bond is, how bonds differ from insurance, the best questions to ask when you're told you need a bond, how to secure that bond once you know what you're needing, and then we'll open up for an audience Q&A at the end. So first, what is a surety bond? A bond is a financial guarantee or contract between three parties, the principal, the surety, and the obligee. When a bond is issued, the surety is financially guaranteeing the obligee that the principal will act in accordance with the terms established by the bond. So the principal can be yourself individually or your company. The surety is the insurance company that financially backs and issues the bond, and the obligee is the government entity requiring the bond. They could be a city, like the city of Chicago, county, like Los Angeles County, or a state, like the state of Missouri. So what does that actually mean? Like for an example, currently in the South, we're seeing some bad weather with some tornadoes. As a contractor, you might be heading there to help repair some damages. You might find that the city you are working in will require you to secure a $10,000 license and permit bond to do work in their jurisdiction. You could put up that $10,000 in cash directly with the city, or instead of giving them $10,000, you could contact SuretyBonds.com and pay $100 a year for a bond. That way you have $9,900 available to operate your business instead of held up with the government. The surety is guaranteeing the obligee that money is there so that the principal doesn't have to put it up yourself. So a bond is a form of a line of credit to protect harmed parties in cases of fraud or malpractice on the part of the principal. So how does that differ from insurance? I answer a fair number of calls where the principal asks for a bond to protect their business. Unlike insurance, bonds do not protect the principal. The surety bond protects the obligee requiring the bond and the customers of the principal. So for example, with our contractor, the liability insurance will cover any damages done while on the job, while the bond is protecting your clients from you taking payment and just disappearing without doing any work. In the event of a claim against the bond, the surety will pay out the claim, but then the principal and the owners of that company are personally responsible to reimburse the surety on the claim. So the bond is not removing the liability from the principal. It is just allowing you to operate without tying up capital. It's also important to note that surety bonds are not transferable. When you purchase a surety bond, it is in place to guarantee that specific bond. We cannot just add a second obligee to your bond. A second bond will need to be purchased. So now that we know a little bit more about what bonds are, we'll discuss here when you've been told that you need a bond, what to do. Chances are you're in a government office or filling out an application that requires a bond be filed. That government official or application will probably just say bond. So most people I speak with will call in and say, I just need a surety bond. Unfortunately, you can't just get a bond. The easiest way I can think to explain this is you would never go to a car dealer and just ask for a car. There's a very specific vehicle you're looking for, whether that's like a 2020 Ford F-150 or a 1970 Volkswagen Beetle. Both are vehicles, but both serve different purposes. So when you need a bond, there's a very specific form, amount, and way the bond needs to be issued. Having that information up front by asking a few additional questions can help save you a lot of time. The first question you're going to want to ask when you find yourself needing a bond is you're going to want to determine what type of bond is needed. So you're going to want to ask, is this for a license requirement or is this for a government contract? The most common requirement you're going to come across is for a licensing or permit application. These are bonds needed to work in a certain area, typically at like the city, county, or state government levels. It's important to note that no two requirements are the same, meaning City A might want a $5,000 bond listing you specifically as a roofing contractor, while 10 minutes down the road, City B might want a $10,000 bond listing you as a general contractor. And you could be doing the same work in both of those cities. The second type of bond you might find yourself needing is a performance and payment bond. These bonds guarantee a contract you have with the government. That contract could be anything from constructing a road for a city or the wiring in a school for a county. For these bonds, it's important to note that there are no blanket coverages for them, meaning they are issued on a contract by contract basis and guarantee the completion of that specific contract. So the first type of bond we're going to take a look at here is for license and permit requirements. Unfortunately, in my experience, obligees often will not give you all the information you need up front to make sure the correct bond is issued. When you call suretybonds.com or visit our website, the last thing we want to do is send you back to the obligee. However, sometimes it's necessary because you were not given enough information to make sure the correct bond is issued. The only thing worse than having to contact the obligee again up front is delaying your project because the obligee rejected the bond for being incorrect. Feel free to give me a call when you're ever in an obligee's office. Here at suretybonds.com, we have an extensive library of bond requirements. It can always figure it out, but having you close to the obligee in the event of an additional question is never a bad thing. So when you first hear or see that a bond is needed, ask the obligee if there's a specific bond form it must be issued on. The policy has to be on that form or they will not accept it. Who is requiring the bond, meaning how exactly will the city or county's name, also how will your company or your personal name need to be on the bond? What bond amount do I need? Depending on the obligee, this could be a $5,000 bond or $100,000 and even higher. And then lastly, what trade or licensing should I apply for? Do they want you listed as a general contractor, or do they want something more specific like roofing, electrical, or plumbing contractor on there? If we have answers to all those questions, we can make sure the bond is issued correctly so that you can get to work faster. Here. All right, so next we're going to take a look at questions to ask when you need a bond to complete a contract for a government entity. When you are bidding a contract with the government, they will often require a bond to guarantee the contract. These bonds are referred to as performance and payment bonds. When speaking with the obligee, you will want to make sure you secure the RFP, which stands for Request for Proposal. This is usually issued when they are seeking bids. Also, a copy of the contract would be great if it's available. Oftentimes it's not yet, but if you can, that would be great. Without at least the RFP, we don't know what we're guaranteeing. So we have to have that to continue with underwriting. The underwriters will also want to see financials for these bonds. So you'll want to make sure that your profit and loss statements and corresponding balance sheets are all up to date. For these bonds, it's best to contact me directly so that we can discuss the contract requirements and see what additional information we will need to submit to underwriting for approval. All right, so now that we know what bond we're needing, we want to know the price. The most common type of underwriting for licensed bonds are what we've referred to as freely written or instant issue. Most of your city bond requirements will fall in this category. They do not require underwriting, and therefore, when you work with suretybonds.com, they can be purchased online or over the phone and typically emailed to you within minutes. Rates are usually going to be $100 to $250 a year, and depending on the a year depending on the requirement. And if you ask all the licensing bond questions up front, then you know it's going to be issued correctly, and you can get to work faster with that policy. Pricing for bonds that are required for state licensing or with amounts greater than $25,000 are usually credit-based, meaning the price that you pay is based on an assessment of the owner's credit history. A common question I get is, will this hurt my credit? With us, it's a soft credit review, so it will not impact your credit. While the pricing isn't instantaneous, I can usually have the quote to you that same day and often have the bond issued the same day as well. Lastly, personal and business financials are needed for performance and payment bonds and very large bond licensing bonds of about $100,000 and higher. So now that we have our bond and we have our price, how do I secure the bond so I can file it and get to work? The obligee requiring the bond determines how they will accept the bond. A growing number of obligees will accept versions that we can email you to print, sign, and then file. However, others still require a document with a raised seal to verify its authenticity. So that we'll actually have to mail to you to meet the requirement. We've got an overnight, 2-day or 3-day option for you on that, so you can still get it right away. And I'll be able to explain exactly how that bond needs to be sent to you up front, so there's no surprises for you. Bonds can seem a bit confusing at first. However, once you get 1 or 2 of them under your belt, you'll have no problems navigating the requirements. Plus, you'll always have myself or suretybonds.com available for any questions you might have. There's no one in the surety market quicker than us here at suretybonds.com, so we can make sure you get paid faster. That kind of concludes my quick presentation here about bonds and the pricing and how to secure them. I think we're going to open up here for some questions with Johnny.
Yeah, if anyone has any questions, feel free to put them in the chat. Matt, I had one question while we're waiting for any from the audience.
Yes, sir.
Typically, as a contractor grows, they might want to take on more or bigger projects. What are some ways that a contractor can increase their bond limit? If they have a $10,000 bond with you and they need a $100,000 bond for a bigger project, but they don't necessarily qualify for that amount according to the credit checks you run.
Absolutely. So it's tough. It can be tough to get qualified. The biggest thing I'd say is just having some form of history with the surety where you do get performance and payment bonds on smaller jobs that require it, and they see you complete those jobs, and we can build you up to higher bond amounts. The second one is a little bit tricky. I definitely don't want to tell anyone how to fill out their financials, but you can see with contractors that they fill out their financials to try to keep their taxes down. Well, it makes a lot of sense, but that can hurt you with the underwriting because it's not showing everything that it should be, and it might hold you back from getting approved on those larger contracts.
Cool. We have one question about bid bonds.
Yeah.
How do bid bonds work?
Yeah, so bid bonds really fall under that performance and payment. So basically, A bid bond is stating that you're pre-approved for a performance and payment bond if you win the contract. So a lot of times you'll see where the government will require either a 5 or 10% bid bond filed with your bid. So basically we need to get you pre-approved for the performance and payment bond, and then we can issue that bid bond. Bid bonds are typically really cheap, $100 for the first one you need. Once you get set up in a bond line, unless we've issued a lot of them and you never won a job, they typically won't charge that again. And then if you win the job, the performance and payment bond is going to be somewhere between about 2 and 3%. And then sometimes lower once we have that history built up.
And that bid bond guarantees that the contractor will complete the contract for the price that they bid, right?
It guarantees that they are pre-approved for the performance and payment bond if you're chosen to win the contract, basically, or if you're awarded the contract.
Gotcha. Brenda asked, they said they're on the other side of the equation. They're the subcontractor for a contractor, and they're not getting paid by the contractor. So how do they go about getting payment on a bond?
Yes. So what I would suggest is if there's a performance bond in place, it should be on file with the obligee, whoever they're completing the job with. Contact them, ask for the insurance company that holds the bond, Google that name next to claims department. It should pull up a way to contact their claims department, get the bond number from the obligee as well. Call them, shoot them an email, get in contact with the surety's claims department, and they should be able to direct you how to go about that.
Yeah, so one of the things that we commonly hear from subcontractors that are in the middle of a payment problem is, how do I even find the bond information? Which is a big problem. And what we always tell people is, if you're a subcontractor working on a job where there are bonds, get that information at the start of the project, before you ever have a problem. You send a preliminary notice on that job to protect your bond claim rights in most cases. At the same time you send that notice, just request, a first page of the contract, which would probably have the bond information in it.
Yeah, I'd say that's a great tip. Just work it into your vocabulary at the beginning of every conversation to ask for a copy of their bond. That way you have it up front. That's a great tip.
But in terms of, Brenda, to answer that question a little bit further is, anytime that you're unpaid, where there's a bond on the project, a payment bond, that just involves filing a claim with the surety company that provided that bond. And so that's why it's so important to have that information before a problem ever exists, because once that dispute is underway, it's much harder to get that information out of the GC or contractor that you're working for. Brenda, let us know if we answered your question or you want any follow-up on that. Amy said, as a creditor, should I be concerned when a potential credit applicant has a smaller bond, like a $6,000 bond?
No. Usually the bond amount is not determined by anyone but the government entity that wrote the rules or laws that enforce the bond. So that's just the amount that they decided has to be in place. So I wouldn't be too concerned about that. That was kind of out of the contractor's hands, and they can't really do anything about that.
So they might be, a giant, well-established contractor, but they just have a smaller bond because that's what was required for that, for their work in that particular location.
Exactly. Yeah, that's what the obligee required for that area, and it has no, it shouldn't look or reflect poorly on the contractor in any way.
Gotcha. Lisa says, what if companies do not want to provide the bond information?
I don't know why you want it. It's why you have it, so that you can say you're bonded or to meet that requirement. It's as long as you're operating the business according, in an ethical and fraudulent-free way, it can't do you any harm to provide that information. So I'm not sure why someone would try to hide that information if there's a bond in place.
Yeah, I mean, it goes back to that, requesting information in the middle of a dispute it's typically going to be harder to get that information out of people, especially when it's, they know that you're requesting that information in order to file a claim. It's much easier to get that information up front, just as a matter of business. We're on this project. We always get a copy of the bond at the beginning of the project. So it's a friendly interaction versus an adversarial, reactive experience. And so Susan had a similar question. How can you find bond info on the GC you're working for if the information wasn't provided up front? We have an article, I can share the link with everyone that talks about how to find a copy of the payment bond. Sometimes it might be on a government project, it might be a freedom of information request. There's a few different ways. The government entity, the obligee that's requiring the bond would have a copy of that bond as well. So if the GC isn't necessarily forthcoming with that information, there are some other avenues you can go through to get a copy of the bond. Linda says, if they're trying to file a claim on a bond and miss the filing time frame, what options do you have to collect outstanding money? This one, Matt, do you have anything?
I don't have much to add on that. No, I'm sorry.
Okay. I would say, a bond, like filing a claim on a bond, is very similar to the process protecting your right to file a claim on a bond is very similar to the process to protect your mechanics lien rights on a private project. And there are deadlines associated with that process. So if you miss a deadline, a subcontractor on a government project might be required to send a preliminary notice by a certain time. And if you miss that deadline, you can lose your right to make a claim on the bond if you aren't paid. Similarly, there's a deadline that you have to meet in order to actually file a claim against the bond. And if you miss that deadline, it may be that you lose your right to actually make a bond claim. In that case, losing your lien rights or your bond claim rights can be a challenge, and that those are two of the most powerful tools that contractors have to enforce payment when there's a problem. If you lose those rights, it might be taking to file a claim in civil court, over prompt payment or a breach of contract. So there's a number of legal avenues that you would have to collect that outstanding money. It might also be, working with a collection agency to go after that amount, because that's, again, the terms for that should be outlined in your contract. What the payment is and when it's due. I've got some other resources that we can share in a follow-up email to this as well that will answer some of these questions further. Amy also said, is the bond number and name of the bond insurer completed on a credit application enough info up front, or should we take this a step further and ask for a physical copy? It seems anyone can provide fictitious info on an application.
You could always ask for a copy of the bond. They won't have an original typically. The original was filed with the government office that it was needed for the licensing or for the contract. So they wouldn't probably have multiple originals on hand to send you. What I would suggest is just asking for their broker, get a copy of the bond. Who did they work with? Was it suretybonds.com? Give us a call, give us the number, and we can tell you if it's in effect or not. Or reach out to the insurance company directly. But unfortunately, they're not going to have multiple originals that they can send you. I think that was, if I'm understanding the question correctly there.
Yeah, I think she was saying, someone fills out a credit application and they just write down the surety company and the bond number. What you're saying is she could call you and say, hey, I've got this contractor. Is this bond number valid?
Right. Now, we would only have record if we officially issued it. We don't have like every bond number, but if you search for that insurance company and contacted them or found out what agency they went through, they'd be able to validate if that bond's legit or not.
Okay. Chris asked, what happens if an obligee makes a claim on my bond that I don't agree with?
Yeah,
Maybe that's like a bigger question. It's like, what happens when a claim is made against the bond? Like, what is your process as the surety?
yeah, so that's a great question. And there's no, unfortunately, just across the board answer. It depends on the language on that bond. Some bonds are going to be written where, they got the final say, and if they claim against it, they claim against it. There's not much the surety can do. A lot of bonds, though, the surety is able to investigate and see if that's actually a valid claim that's being made. They would reach out to the principal, get their side of the story, reach out to the obligee. Usually it's just a misunderstanding, and it all gets squared away before any claims are actually made on the bond. But that's tough. It's made out to the obligee, and they have the power to really do whatever they seem or whatever they want once they have the policy.
Sorry about that. I was just saying, Brad posted in the chat a link to verify a bond that was issued through suretybonds.com. So
there you go.
There is a way to go and verify that information. Cool. Well, thank you so much, Matt. And if anyone has any questions, Matt's email is there on the slide. My email, if you have any questions about payments, we have a lot of resources about making claims against the bond and how to protect your right to make a claim against the bond on projects. You can send me an email. I'll put it in the chat. My email is johnny.finity@levelset.com. Feel free to reach out with any questions. And thanks again, Matt, for sharing. This has been great. I learned a lot.
Yeah, thank you. Appreciate it. Thanks, everybody.